What's up, guys? It's December 21st, 2023. And do a breakdown of the Emini. We had an inside day today. Yesterday we had a really big expansion move, and now today the market's starting to contract. Also, something I can't remember if I mentioned this yesterday, but I was thinking like this morning and kind of when I woke up was this is the first pullback into the EMA. This is the higher time frame EMA. And on the 5 minute chart, when there's a really strong trend, the first pullback always gets bought. I can't remember if I mentioned I was thinking of a selling continuation or if they were going to buy the dip on the hourly time frame. So, you guys might see this right here. I'm going to start leaving this here as just a reminder to myself that, in no particular order, I'm just putting this up here, that I'm going to try and focus on channels, gaps, and what part of the market cycle we are in, because I think that's where I think getting really good at these three things is what we need to know to place trades. So we have a really big gap up after a huge sell. And what I meant by first pullback is right here, by the way. So we trended for over 20 bars. When we trend for over 20 bars, usually the first pullback gets bought, because the market sees this as a discount. This is the first discount the bulls have got since October. I thought we should try it, but not like sore. So bar one is continuation from the big gap up, and we're right below last week's high. The market was previously breaking out of last week's high earlier this week, and then we had a sell yesterday. Bar 1 and 2 is continuation, and bulls start to get this channel right here. Bar 3 is the start of a bear channel and the end of a bull channel, because it starts to break. We could say this is the steep channel. Yeah, and then the bears get their channel down. This is a really tight channel. It's hard to buy. Bulls are not making money, and then bears get the failed breakout into the EMA out of the channel, and it reverses. 50% of the time the channel can reverse. 50% of the time the channel can continue. With the gap up, I would think I was long here and I ended up getting stopped out here, but with the gap up, I think the short term always in direction is long, and bulls break the bear channel. They eventually do get a retest, but I don't think this is strong enough of a channel to get a retest right away. They did. If you got short here, bears who short at the high of bar 9 will get out at 50%. That's where you can see the wick on bar 10. The buying of the shorts of trapped bears and the buying of the bulls creates a 2-bar trend, a very tight bull channel. Bar 12 breaks the channel, and then we go into a range. We can see the market cycle through range expansion with the gap up, and now we have a range right here. Oh, I should also write the first 6 bars of the day, because I don't want to forget to talk about the first 6 bars of the day. But first 6 bars of the day, big up, big down. So we're range bound, and on range bound environments, I think the market is going to be in a mean reversion state. So these are not breakouts. These are buy and sell vacuums. Bears are shorting strong bars, bull bars, and bulls are buying strong bear bars. So that's the opposite of a trend. The market is range bound here. We have a range within a range. This is the range I was talking about. I'm gonna delete these two. And when the market goes range bound, I'm trying to force myself to just wait for the breakout. And the breakout did come. Unfortunately, I was outside, so I didn't hit it. 2-bar follow through, breaking out of all the bars range. And specifically, these bars are nice looking bars after this. Bar 12 is strong enough to get a second leg down. And I also think bars 9 through 10 or 9 through 11 is strong enough to get a second leg up. So I was pretty hesitant within this range. And I also think the market was confused because it's a big up, big down, and we ranged. Looks like yesterday's downtrend had an influence on this range instead of this small gap up, and they got the breakout for a second leg down. This pullback became very long into the EMA, and the bears got a brief leg down. So maybe we say leg 1, leg 2, leg 3, or you could say leg 1, leg 2, second leg trap. The bulls have now the bears are now starting to close this gap, and they have gaps open themselves here. Here is a bear gap. I'm gonna delete these. And all the bull gaps have gotten closed, except there is a bull gap here now. This can also be seen as a bull flag because this is a pull. So if this was the bull flag, this would be a wedge, like push 1, 2, and 3. Like 1, 2, and 3, giving us a wedge pattern bull flag. And the deeper the pullback is on the breakout, so this is a huge breakout bar, because look at this gap up. That's a breakout bar because it's breaking out of the past, like all these bars, like over 10 bars range. And the deeper the pullback towards the breakout, the less of a chance of making a new high. We pulled back to about the 75% level. I'm eyeballing like 25, 50, 75, 100, somewhere down there. We pulled back and pushed off, so I was scalping long because I was not sure about the sell-off from here and here. However, after this breakout, bar 47, the market reverses, 2-bar reversal, strong. This bar 47 is stronger than all these bars and bigger than bar 46. We break out into the EMA and we start a bull channel. Here, the last bar 69 through 72, the market starts to break out and vacuums into the EMA, and the bulls slowly drift higher for a new high late in the day. This is the low probability event to get a new high in the day. I was thinking that we could retest this level, because not necessarily because it is last week's high, but also this was not a bad buy, and I think bulls that bought here bought lower and wanted to get out at break even, well, at their original PT, so they were buying. And also we can note that when this was being printed, every new high got sold. So you buy the EMA, sell the new high, buy the EMA, sell the new high, until it's an actual breakout. My PT was around the bar 1 level, so I got out on this bar here as it was being made. Pretty happy with the day. I got to control my trading. It's getting good though. Yesterday was the first slip up I had in a long time, and I paid the price for it. I was like $500 away from passing a challenge account that I've been scalping 5 points consistently, and I'm gonna do a breakdown of what I did this weekend. But it was a really good day for the bulls. I had a good day. I hope you guys had a good day. We'll do a quick higher time frame breakdown. This is the weekly. Yeah, weekly chart's starting to look like a doji. We're still trading around last week's high, but the follow through for this bar is bad because if this was a new breakout bar, this is not getting good follow through. We're barely above the wick by like 1 tick. That's not actually 1 tick, but you guys understand what I mean. Oof. First reversal down after a tight bull channel is getting bought. And just like on the 5-minute chart, when a trend channel line breaks, we could fade to the recent highs. I don't know if we're gonna get back to the breakdown level, but buying this bar would make you money today. And here we can see that the first pullback on the hourly chart also got bought because we were trending for more than 20 bars in an orderly fashion. Orderly. They started to get parabolic, went back to orderly, and then they had 3 pushes up, creating a wedge top, and it sold. Hope you guys are learning and studying. I am trying to make these more structured and less rambling. So to add to this list, I'm going to do, just so I know, it should be the first thing. First 6 bars, then I talk about the channels, gaps, and the market cycle. The market cycle here is still a range, and then, so, look, let me do the market. I forgot, I did want to mention a couple of things about the market cycle. I guess that'll work. So here, this is a range-bound environment. This is the trend. This was the trend, and then we go right back into the range. The market cycle is resetting. This is a breakout, but it's also a range. I didn't mean to put that circle thing there, but I'm not going back to fix it yet. See, so it's ranging, we break out, market cycle. So maybe we get a range overnight session and then they break out. I don't know, but market cycle repeats itself, and I need to get really, really good at identifying what part of the market cycle we're in at any given time. Because admittingly, I bought this high thinking this was some sort of deep pullback, wedge bottom like that. But double top, double top, double bottom, double bottom, double bottom, double bottom, double top, whatever it is. That means don't trade, wait for 2 bar follow through. This was a good breakout. And look, I would have made 5 points. I said that so loud. I didn't, where did I make the first 5 points? I made the first 5 points here, then I scalped a little bit here, and then I caught most of that. So yeah, it was a good day. I just wanted to put some emphasis on how the market's breaking out or ranging. Hope you guys are studying, using your stop loss. I drop these videos every day at 3 p.m. Turn on notifications, hit the notify button, drop some comments, tell me what you guys are up to. If you guys want to email me, drop a comment, and we can talk about some charts. Have a good night. I'll talk to you guys tomorrow. Bye.